Time now for our 2-minute drill. Let's bring in Mike Dinger, Gradient Investments President. Mike, good to have you on here. I mean, a lot of back and forth in this market over the last few months. It must have surfaced a bunch of opportunities here, stuff looking oversold or too high. We talked about a cybersecurity play. What's your favorite one here?
Well, in the cybersecurity area, I mean, before we start there, I want to concentrate on opportunities in tech. I want to talk about companies that are profitable and they're category vertical leaders. In the security area, which I think is, top of list for corporations, I think Palo Alto Networks is a company you want to own. They're profitable. They can grow their earnings and sales for 20% plus going forward. And I think they can hold their margins even in a recessionary environment.
And you don't think that one has been, I guess, sort of well recognized for its advantages? It has held up better than most.
Yeah, it has. And that's kind of my point here a little bit is I want to own companies that are mature, been around, they have best of breed products, because I think those are the ones I mean, I don't want to play the price to sales game. I want to play the price to earnings or price to free cash flow game a little bit. And when I look at security, which I think is a great vertical, I think Palo Alto is the leader there, and that's the one I want to own. I want to own leaders because I think they are going to be the ones that outperform going forward.
Salesforce is a leader, obviously, in its area. Why do you think this one has recovery potential?
Well, Salesforce has come down. I mean, they kind of sacrificed earnings growth this year, but I believe that earnings growth is going to pick up big time. There's no argument that they're a leader in the software as a service area, and I feel they're cheap enough to own where you get a 20-25% earnings grower at a low 30s multiple. It's a good buy.
All right, and quickly, PayPal. This is another sort of comeback candidate.
This is a little bit different. I mean, I still think fintech is important. PayPal finally beat a quarter, and they maintained their guidance, which proves to me that consumers are still spending. I mean, Elliott Management threw $2 billion in an investment there, and I think starting next year, their EPS will start to grow 20% plus, and at a 20 price to earnings multiple. Seems like a good buy to me on a recovery story.
Yeah, one time a very expensive stock, but as you mentioned, it's really come back down toward, I guess, a broad market multiple, so not paying so much of a premium. Mike, great to catch up with you. Thanks very much.